Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed markets around the world today. Asia had a soft session with the Nikkei off about 1%. Meanwhile, Europe, we're seeing green arrows as they trade near the highest levels of the session. It looks like our futures are following Europe as they're at 5 to 6 handles this morning.
Yes, the DAX is up almost 1%, the FTSE's up, the CAC is up, and I think we're just ignoring the fact that Asia's down because it wasn't really that potent. So with that being said, our futures are up 6-7 handles after a very, very tight session yesterday. Sometimes tight sessions are good because they add a little bit of a building block from last week's travel range. So what am I talking about? Let's just get right to it. First of all, here's the chart of the SPX. Here's more of the long-term chart. So a lot of people are getting frustrated because of we haven't in the last 2 years taken out any type of resistance. We've had some moves where you had that big down move last summer when the range got tight. We went below the 8 and 21 day, which led to this double bottom where you had a nice move out of the W back to highs, and then it failed again to start the year, and then here we are, another double bottom, very similar to this one, took another trade above the W pattern, and then all of a sudden, boom, we stalled again. This time we stalled a little bit closer to 2100, didn't get as high as the 2015 highs. So we just had somewhat of a corrective phase, and everyone's not sure whether or not that was it. So last week, we held the 200 day, we did a red dog reversal around 2033, and now the question is, can we get any type of upside to blow out this descending channel here? That could be a right shoulder, but it could also be a descending channel that leads to a higher move, because overall, from the lows to the high, all we've really pulled in is about a third of the Fibonacci range. So let's take a closer look. Let's look a little bit more granular for today. So here we are for today. Short term, you have this small little resistance zone. As of right now, the spiders look like it's testing this 2055. So for this to perhaps make a little bit of a bigger move to the bigger resistance, we're going to need a very strong move above 2055, and then Friday's high is 2058. So those are the two pivots I would write down. We did hold higher. If you think about where we came from, this was last week. Remember that red dog reversal? We traded below 2034, put a low in the 2025, and came up, and that sometimes relieves some pressure. So now the question is, can we take out this micro trend line to perhaps see a move a little bit closer to a bigger resistance? But there's lots of big resistance along the way, so I don't know how much power we can get, but I think right around here, a close above this gets us at least a pop to there, and then we'll see if it winds up leading to more. So here's micro resistance, here's a little bit bigger resistance, and then here is much bigger resistance, and we'll cross every bridge as it comes. As of right now, we'll see if we could hold the gap, trade above this, and see if there's participation around the block.
Ever since last week's hawkish Fed statements, commodities have been under pressure and banks have been trying to act a little better. Scott, what level do you think that oil needs to hold?
I think 47 was last week's low, and we came from 25 to almost 50. And once you start hearing everyone talk about going over 50, that typically means they have to shake things up, and they didn't really shake things up too much. Yesterday oil started weaker also, and I was like, what levels need to hold just to keep some intermediate commitment? Well, you look here at the USO, you will see that overall we didn't even get to the 21 day. Okay, you have two trends here off the lows in the USO. This was one trend, which we didn't get near, and then here's more of the accelerated trend, which was still above. So everyone started talking about weakness in oil. Oh my goodness, and here's where we are. Not much of a decline. So with that being said, if this was the low, the hawkish Fed low, perhaps it could add some fuel to the upside by the USOs going green today and getting above this 1170. But as of right now, your point of reference is right here, 1144. Even if it went down to the 21 day, which it held here, and it held here, it would still be fine. So at this point, oil is not a headwind. So don't get lost in the media obsession with it because it's down a little bit from the highs.
And while we're talking oil, did any of the oil names hold up during this period?
The XLE is interesting because when oil made a new monthly high, it didn't, and then when it pulled down, it didn't fall apart. So, I see a nice consolidation in the XLE where if, oil does get its footing a little bit, there could be a good pivot here, for more upside action in the XLE. the XLE has been a really nice trading vehicle since the lows. Okay, here's when it triggered above the 8 and 21 day and has been following a nice trend ever since. Here's your trend off those lows. So it made a high in late April where oil made another high, but at this point it's getting really tight. So if the market wants to continue higher and oil holds 47, perhaps you can get another trade here to the upside. So your resistance pivot comes in a little bit closer to what is this? This is 66.91. So if you wanted to be long versus 65.50, that would be your tier 1. And if it starts getting above this, that means the market's starting to get some upside traction. So we'll see which way this wedge resolves. My gut says it could be to the upside.
As I mentioned before, banks are trying to act a little better with JP Morgan as the leader. I know yesterday you talked about some levels that they needed to hold. What levels need to clear today in order to provide a lift for the market?
Right, so there's like two different types of trades. One, you buy versus support, and then the next, if it gets momentum. So we'll see if some momentum comes back because the futures are up, and if the market wants to continue, the banks could be helpful. You look first at the XLF. Let's go here. Nice wedge in the XLF. So we're seeing a lot of tight patterns here that might be able to expand. Well, here's your XLF, very tight. Here it held the top 50% of this move. So if you bought a little XLF versus this low, that's trade number 1. If it starts to clear this 23.30, that's trade number 2, and then that could help the overall market. Let's take it into some individual names. You have JP Morgan. JP Morgan I'm actually long because it's been best in breed. It ignited above this spot, and now it's trying to hold. We talked about if it could hold 62.90, be a buyer, and then for it to help the market, it's got to clear this 64. So if JP Morgan can start to clear 64, it might help some of the other banks. What do some of the other banks look like? Well, here's Citigroup. Citigroup looks okay. Not it's still below the 200-day. It's not a blockbuster, but it did clear this descending channel here. Okay, and now it held 50% of the wide range bar and looks as if maybe it continues to the upside. So far, so far so good. That's all you could say for the banks. Let's go quickly. Bank of America. It did win a settlement, which could also be helpful for the banks. Maybe this time it takes out this 200-day with some force. That's around 114.90, but it also held the flag. So if you're in tier 1, tier 2 comes above this, and if the banks start taking out some of those areas, it probably helps the S&P.
High beta tech remains mixed with different setups every day. Did it surprise you that Facebook and Amazon were so weak yesterday?
It did, because yesterday I had a little bit of a long side bias, and I was trying to buy Facebook, and it was just weak. And it actually closed near the big earnings gap, and now with the futures up, it's probably up 40, 50 cents. So I'm going to watch Facebook close. My inkling is to see if the futures go, and it doesn't go, maybe they try and sell it off a little bit. And if so, maybe there's a cute short. And then if you look at the chart, it closed right on this gap. There is a lot of support here. So I'm not sure if it's that weak in order to break below this 2-day low and see the 50-day. But if the futures were down, this thing would be down. So I'm going to wait and watch because sometimes they like to catch you. If they catch you, you better. And if you're short overnight, I would say this is your pivot to cover. Your pivot to cover here is 117.60. If the futures go and it doesn't go and tries to go red, maybe we get a quick trade into the gap. But I'm going to be very careful that it's not just like a misdirection trap because Facebook has been strong and it's just in this kind of funky stage. Same thing for Amazon. I think some people might have went out short Amazon because it closed on the lows yesterday. It's still below. It's still flagging. It still actually looks really good. It's just in this little consolidation phase extended. So there are probably some guys short Amazon overnight thinking that the market was going to come in today. So now they're like, what do I do? If that's you, use this 707. If it starts getting above 707, you could see a move back to high. So 707 is your resistance. If all of a sudden market goes up and Amazon and Facebook don't, these could be situations that might be something for the downside. But again, make sure you see that divergence before you just go back to the stock because it was weaker yesterday and out of play.
In your lonely call yesterday,
Which
you talked about some upside opportunity in Netflix. How did that work out?
It worked out well for other people besides me because I was wrapped up in Facebook and Amazon, and that's sometimes what happens when you have 20 names on a note. You can't trade them all, but yesterday Netflix was the one that took out resistance and gave you a nice trade. So if you participated in Netflix, congratulations. You made some good cash flow yesterday. You had two spots. One when it cleared this lower pivot, and then the spot we spoke about yesterday was right here around 93. Now it seems like you can get up to the 200-day. So if you're in Netflix long, after being into the third day, you know what I talk about. I talk about selling the third day, not chasing. So here's that bigger resistance. So at this point, I would take the trade-off into that, and then maybe you get some kind of divergence, and you can get a cute short also, because look where it came from. Came from sub 87 to almost 96, 97. That's 10 points in a name that's still considered sort of broken. So I would not be chasing it into this 97 or 98. I'd be selling it especially if you bought here or bought yesterday. Take some of that off.
Tesla reached its 200-day yesterday and got rejected there. How important is it to hold its secondary price of 215?
Very important, because that's what a lot of people got issued stock at. So either they took a quick gain of 5 points, or now they're like, "Ooh, I want to stick around for more." And if it breaks that price and doesn't get support, those guys don't want to lose. So I'm not saying it's going to get there today, but yesterday we talked about the resistance at the 200-day, kind of like what I just showed you with Netflix. And if you look here at Tesla, it got there and failed the first time. So you typically, the 200-day is resistance the first time. Not only did it fail at 222, it also did somewhat of a red dog reversal here, as it went back below 220.55. So the question is, does sellers come back to this? Because it did close weak and the futures are up, so sometimes sellers come back. So, look to see if that's the case. If that's the case, here this is important. Okay, yesterday's low is 215.86. This 215 is more important. Do they break price and get people out and then bring it back above, or does it hold every short presses and do we get a bounce? So we'll see what happens here with Tesla. It would have been more interesting if we were down today, because it probably would have been opening around there. But since it's up, you see whether or not there's no buying if the futures continue and this stalls. So it'll be interesting to see what happens here. Like all four of these high beta tech Chelsea names are like kind of weird, because you have Facebook and Amazon that were stronger, that have been a little bit weaker. Then you have Netflix that was broken, but it's been a better trade. And then you have this Tesla, which picks and chooses its battles whenever it wants to.
Right. Now in mega cap land, Apple has acted much better since the news of the Berkshire Hathaway stake. It reclaimed the 92.50 pivot fast.
Yes.
Do you think that the post-earnings gap could come into play here?
It could. I would not be chasing Apple long now. Like you said, switching gears to that 92.50 had to be fast. But if you know our techniques and when major pivots get broken or reclaimed, you had probably the ideology to do that. So now if you look here at Apple, this was your spot, that it broke below. Remember, I was in Eastern Europe, broke below 92, gave us a good trade, and then had an inside day, then broke back above. So right here was your spot to say, I need to switch gears. We now just reclaimed the 8-day. Here, it was below it. Remember last time when it was above it? It gave you a nice trending trade. And at this point, maybe that's what's happening again. So here's your new micro tactical trend off the lows. So like you just mentioned, here is your post-earnings resistance. So yesterday's high is 97.19. If it gets above that and holds above that, the next point of reference here is 98.71. So then we'll see whether or not that, if it pushes through and fails, or pushes through, holds, because there's quite a big gap here. So at this point, let's see how Apple reacts. It's up with the futures. I probably would not be chasing it long, but if you're looking to fade it, make sure you fade it versus a level, because it's been strong, and now it's actually above the 8-day and the 21-day, which is starting to curl up. So, off the lows, the tactical bullish move is intact, but the more intermediate bearish, for those who got caught all the way up here, are still feeling it. So, all these stocks create different, timing periods to be long or short. Here, just to show you, is when it broke below the moving averages and stayed below the 8-day. That's why we call it a momentum trend. Pushed above, failed. Pushed above, failed. So now it's back above it, and we'll see whether or not, or see how long that lasts for now.
A name we don't talk about too often is Salesforce.com. It reported strong earnings. Do you think that it could make all-time highs here?
Well, if the market wants to hold up and continue, you need leaders. And we saw NVDA take off, and no one really was that involved. And now with CRM, I'm like, you know what? It's an earnings play. It's a name that I'm familiar with. Let me try it. I tried it yesterday. I'm long a little bit. You look at CRM, you'll see that, although it's had a big move. By the way, look at this king and queens pattern right here at the low. Boom. Red bar matched by a green bar. But anyway, and then here is when it was reborn with a gap up. So two ways the stock could regain its composure. King and queens formation, take back the 8-day gap up that held, and now you have another gap up after strong numbers, and it turned up yesterday. So I would say this is a very important pivot level. You know, if it wants to break out above it, we see if markets have that kind of power. So I would say you could be in it versus 80.71, and then at some point, if it were to take out this 82.50 with some kind of authority, it'd be nice to see a stock break out. I haven't seen many of them break out, so be careful. NVDA was one that did. You know, NVDA didn't waste any time. Look at the size of this gap up here. Lots of shorts were involved, and took out that post-earnings high, and now look where it is. So I wouldn't be chasing NVDA, but I'm just showing you that something like this can happen, and maybe it would show some market health if this followed suit. But we'll see if it needs a little bit more time or not.
Metals are under pressure this morning, and it makes sense as they lost momentum last week. What's some support for the GLD and the miners?
Yes, last week when the Fed got hawkish, first, you know, reflex was to sell oil, sell metals, and it was the right reflex because that's the hawkish playbook. You know, hawkish Fed, dollar higher, commodities lower, plus everyone was getting very bullish on the metals, which tends to be the opposite these days when the crowd, you know, is involved. So here you go with the GLDs. I actually had a call spread that, you know, worked out, but not as well as I would have thought. Here is when it looked great, right? This is when we bought the 120s, and then up here I sold the 124s, and then right here I had to get out of the way and adjust. And I'm glad I did because it would have been a zero. So anyway, you know, where is there support? You know, it's not a heck of a lot. You know, you have yesterday's point of reference at 118.75, and then you have this spot, and then you have the, you know, the 200-day that'll probably be moving up. So it's kind of in no man's land. It lost momentum, and now the question is just, you know, if you want to turn this into a big channel, I don't want to be so noisy, where now it's in the middle of this. If we're not able to hold this, then perhaps it, you know, it then probes the lower end of the channel. The miners also broke. You know, the GDX had a big engulfing down day right here. Okay, this it also lost the 8-day moving average and then tried to rally, couldn't reclaim more than half of it. And now it's in the lower end, and I guess you'll see how it reacts here around the 50-day. The 50-day is closer to 22.37. So, you know, trends change and things change. You know, here was your first little shot across the bow. Here was your lower high, and then boom, broke the 8-day, broke the 21-day, and now it's in the lower quadrant. So hopefully you're not too involved there.
Do you have any more closing thoughts for us?
Yes, I do. You know, yesterday you had that narrow range bar where I think some guys overtraded, you know, thinking that we had an upside bias. Last week we had a downside bias. This week I think I've been talking about an upside bias. You don't really have much going on between now and Friday. Friday, Yellen's going to speak around 2:30, and she'll go over her thoughts. Recently, she's been more hawkish than some of the other Fed principles or whatever they're called. So, you know, between now and then, I don't know how explosive we're going to be, but between now and then, the market could do whatever it wants. So that's why I would say write down those pivots. We know those pivots. Here, if you look at the spiders real quickly, because we didn't go over the spiders, we went over, what's it called, the SPX. Here is your 2-day pivot. So if we can get above this spot here, okay, you'll probably see some shorts maybe get squeezed. So if that's the case, yesterday's high is 205.84. Friday's high is 206.10. So that's your spot. If you can get above there with some force, you know, maybe, you know, you see some upside potential here towards this spot come Friday, you know, with a point of reference right there. But overall, you know, you did have some time to switch gears on you know, Thursday into, which is Thursday, into Friday. And now sometimes an inside day is good because it digests that 2-day move. So we'll see what happens here. I think in order for the spiders to get really going and give you a little bit of power, you're going to need some participation from the banks. In order for that to continue, you need high beta to actually hang in there. If Facebook falls apart and Amazon falls apart and Tesla falls apart today, chances are the gains are going to be muted. So we'll see how that acts. Maybe those were fake outs yesterday to trap some shorts. You know, you probably also need, you know, in order to keep going, oil not to fall apart. If oil holds 47 and, you know, hangs around here with the XLE, that'll be another piece of the puzzle. The same way you needed, you know, every piece of the puzzle to be able to press the market last week below 2040, you know, you're going to need a lot of pieces of the puzzle together in order to break it back above 2060-ish to get towards 2070 or 80. And that's the market in front of us right now. We have to trade the market that's in front of us, not the one that we want. And hopefully, you know, you have your game plan set if it starts to confirm it today.
Right. Thank you, Scott.
I'm glad you're feeling better, Chelsea.
Me too. Thank you. Everyone have a great trading day.